Good afternoon. This is Andy Pedraza with Special Effects Academy, and we are on our Forex Weekly Outlook for April 8th, 2018, as we start the trading week off. Thank you for joining us, and with that said, I will get this show on the road. Our contents are going to be, as usual, the currency strength meter, where we compare the week that just ended with the week immediately prior. We're going to take a look at the fundamental announcements that are on the calendar for the coming week. I will focus only on those labeled as high impact. If you want to take a look at the medium and low impact, you can feel free to do so on our website. We'll find a calendar of events there for all the coming week or as far into the future as you want to take a look at. We're going to be looking at the daily charts for the major pairs just to see if we can get an idea of what the direction might be for this week. We're going to see if there are any setups in progress. We rarely find any this early in the week, but every now and then, you know, the market surprises us. The market is open as of this time, so maybe something's there, but likely not. And then some final words as to what we can do to improve trading in general and our outlook and this and the other. So with that being said, that's the contents for today, and I will start with the currency strength meter. And we are looking on the left of your screen is the last week of March. So this is the last week of March, and this is on the right-hand side, the week that just ended, the week of April 1st. So if you look at these two, they look very similar. There doesn't seem to have been any sort of major shift, barring one or two currencies from 2 weeks ago through last week. So if we take a look, the Aussie continued to appreciate against half the basket and was still depreciating against three currencies. Curiously enough, they are the same currencies as the week before, simply in different order. We see the Canadian, the Kiwi, and the pound, same as the week prior. Canadian, Kiwi, I'm sorry, my bad. The dollar is the one in the week prior, and it was replaced by the pound in this week that just ended. The Canadian and New Zealand are the constants, so we just had a slight switch between pound and dollar as to who lost against the Aussie. So the Aussie is staging somewhat of a recovery, a little bit slower than I would like, but it is holding on to its own, and that is a good thing. The Canadian did appreciate against every other currency this week that just ended, so it has continued to regain strength. We'll see how far that goes. I'm not a firm believer in a Canadian recovery just yet. Long term, yes. In the short term, I'm not a huge believer yet. I'm waiting to be convinced. The Swiss franc pretty much stayed towards the bottom or a little bit above the bottom, but depreciated against pretty much every currency except for the Japanese yen. The euro was also a middle of the pack, appreciated against some, depreciated against others. The pound in general had a much better week than the week prior. It did appreciate against every currency except the Canadian and the Kiwi. The JPY continued to lag at the bottom, so the JPY is losing strength against everybody now for 2 weeks running. We can see that it's virtually the same. The dollar had a worse week than the week immediately prior, so it did depreciate against the Australian, the pound, the Kiwi, and the Canadian. Whereas the week immediately prior, it appreciated against everybody except the Kiwi. So the Kiwi has had 2 weeks in a row of appreciating against the dollar. That's another one that I don't believe too much in continued strength for the Kiwi. I think it's trading sideways, and it just got caught up in the upside of the sideways pattern. So we'll see if that reverses for this week. And of course, I have gold and silver at the end just for comparison, and because they do tend to be bellwethers for the market. So we can see that silver depreciated, went down in price against everything else. And gold did much the same. It only appreciated against the Japanese yen and silver. So that is our relative strength meter for the week that just ended. And I will move on to the fundamental announcements for this week to come. Not a whole lot there. We only have two high impact announcements. One of them is the CPI, the Consumer Price Index, excluding food, year over year. April is the start of the fiscal year for most businesses as well as for most governments. They go from April to March as their fiscal year. And that's why we have a lot of year-over-year things being released around the April timeframe, as well as earnings reports and whatnot from major companies. So we're going into that earnings season for the year pretty much right now. So that'll jolt the stock market a little bit. For our purposes, though, I am not I really don't trade the CPI. It doesn't tend to move currencies very strongly. So that for me is a non-starter. I won't bother. But more importantly, on Thursday, in the early hours of the US, 7:30 a.m., we have the European Community Bank's monetary policy meeting account. So a few pieces of data will be released there. Not sure if it's going to have the impact to move the needle on the euro significantly, but I probably will trade that one just because the week is so light on fundamental announcements. So very likely I'll be up at 7:30 on Thursday morning and see if there's anything to be had. But just off the top of my head, I don't think that's going to be a huge deal, but I might as well just dip my toe in the water and see what that brings us. With that said, we're going to move on to a look at the daily charts for some of the Forex pairs that we want to track and see what they're doing. We'll start out with the euro dollar. The euro dollar on the daily chart has been dropping following actually a pretty good trend line. It's not a too steep an angle, and it's definitely not shallow. It has followed it very closely, then broke out to the other side, and is now right back at the trend line. It is at major areas of support resistance, as indicated by this blue shaded area, the cloud in the Ichimoku, one of the indicators I use for my long-term charts. It's also right above a couple of trend lines that are crossing. So it's in what I like to call no man's land. I don't know which way to trade it on a long-term basis, other than that the trend is still, the short-term one is a dropping trend. However, the long-term trend is still rising, and it's right on that trend line. And that's why I say this one could go either way. If we have a significant break, it could drop. And if it bounces, of course, it could go higher, which is my wishy-washy way of saying we have no idea what's going to happen. We're not into predicting business, but I'll be ready to react in either case. If I get a good entry signal on a long or a short, I will take it, because the likelihood of the euro at some point making a big move, seeing as it's in that limbo right now, are pretty good. So I'll be keeping a close eye on that one for the week and probably for the month and even further. Moving on to the pound dollar. The pound dollar has been a lot more consistent in that it is following that uptrend, has not significantly broken it since back around October, the October to December, the last quarter of the year. So this entire quarter has seen a rally of the pound against the dollar. It did falter somewhat in the first month or so, first month of the second month. It did drop, but it quickly broke through that trend line and has now firmly returned to looking for the top of the chart. So this one is likely going to give us opportunities to continue trading it on a long. So if we're trading the pound dollar, our bias is definitely going to give more strength to a long entry than to a short one. I don't see any sign of weakness in this chart at all. It's simply heading towards the top at a pretty decent clip. So that's the pound dollar. I'm going to be moving on to the USDJPY. Now, the USDJPY on the daily has been bouncing along this channel. You can see the two parallel trend lines, very shallow drop, but it has been consistently going up, going down, and now that it has broke this trend line, it is now heading again towards the top, and the top is around the 112 area. We're currently around 106, so this is another one where for any long-term trades, I would be giving more strength to a long play. For the short term, we can definitely play it in either direction. It will likely continue bouncing here at the bottom for quite some time before it manages to pick enough momentum to take it again towards the top of the range. We can see the same thing happening when it was at the top. It made a lot of sideways waviness until it finally managed to pick up enough strength to make a play for the bottom, which it did manage and even exceeded it in the last couple of weeks or so. It managed to break out of the channel before being forced back in. So we'll keep an eye on the USDJPY, but bear in mind this one might not be ready for a major move just yet, but we're definitely keeping a close eye on it. Moving on to the USDCAD. The USDCAD has also been heading towards the top of the chart in pretty much for the entire year, and has now seemed to be running out of steam. So the Canadian weakness in the last 2 weeks has ended, and the Canadian recovery has been in play. I do not think that's going to be long-lived. I don't think the Canadian will be showing enough strength just yet. This is probably a temporary phenomenon, just your normal waviness as the market settles itself. Likely, the Canadian will be making another play for the top or for the underside of this trend line before all is said and done. I am currently holding a long on it with not a big expectation. I'm looking for it to return to this level where it hung out for the better part of the last month or so. It will eventually regain strength. I'm a firm believer in a long-term Canadian strength kind of play. I just don't think the time is here yet. But of course, I will wait for the proper entry signals as I usually do, and play those short-term trades on the hourly charts. And some of them may graduate into more long-term trades if this pair starts moving into a definite pattern, which it hasn't yet. So this one is a waiting game for now. The Aussie dollar, our next pair to review. And we see that the Aussie dollar has significantly weakened against the US dollar since about the beginning of the year. A very interesting piece of information, since it is the only currency that has weakened against the dollar for the entire length of the year so far. All the other currencies have held their own against the dollar. The Aussie is the only one that's been giving up strength to the dollar, and I don't think it will last. You've heard me say that I am in several long-term trades to trade the Aussie dollar back towards the top of the range. It does have some nice support around the area it's hanging out at right now, and has been in a very shallow but still significant recovery for a bit more than a week now. I'm still waiting for that breakout, for it to return to the area of support indicated by the cloud and by all these trend lines. And as I mentioned, it may take a while to play out. So this is going to be a more long-term opportunity. And of course, if we see any short-term trades based on our signals for the week, we will take them. But preference is going to be given to any long signals, as that is the direction I believe it will eventually pick when it gets out of whatever is ailing it right now. Moving on to the Kiwi dollar. If you recall from the relative strength meter, the Kiwi dollar has had a couple of good weeks in that it's had a recovery against virtually every other currency. If we look at the daily chart, though, you can see that the story isn't that pretty. It has actually been trading sideways. So you have a couple of weeks of strength, couple of weeks of weakness, couple of weeks of strength, weakness, strength, weakness, strength, weakness. You get the idea. So it has recently crested again, and you can see that the waves are getting smaller and smaller. It is definitely in a wedge made by this descending trend line, and the bottom of the wedge is the straight line of support that we have here around the 0.72. Very likely, its next wave is going to be towards the bottom of the wedge. Eventually, it will have to break out when it gets to the tip in one direction or the other. But for now, it's moving sideways with a slightly downward slant, as you can see from the shape of the wedge. Descending on top, flat on the bottom. So preference this week will likely be given to any short opportunities to trade it towards the 72 area, bearing in mind that there's not a whole lot of pips in between. Currently trading at 72.68, the bottom is 72 flat, so there's 65 to 70 pips within that that range that it can give up. Still good. I won't turn down 70 pips, but I would not expect it to significantly break out in either direction just yet. Eventually, I would suspect that the Kiwi dollar will try to make another break towards the top. So Kiwi strength will return, but now is not the time, not yet. Eventually, it should go back to the 75 area, which is where it likes to hang out when it makes these highs, as you can see from this earlier 75 touch around the middle of last year. Moving on to the USD Swiss. No doubt about the USD Swiss, it is in an uptrend. It has broken out of the channel, the middle channel it was in, and it is now making an attempt at the top of the upper channel. You can see these three channels, one on top of the other. They're not exactly parallel, but they are behaving like channels. This one at the beginning lasted quite a while. Then it burst through and has followed the top channel, and more recently the middle channel. Well, you guys get the idea. I'm sorry, I clicked when I shouldn't have, so you'll see the chart flip, but I'll be returning to the USD Swiss immediately. I'm not done. So anyway, the Swiss on the daily is rising. The USD Swiss is rising, so that is dollar strength, Swiss weakness, and likely area of to target would be around the 97.30, which is the top of the upper channel, right around this area where the current trend line and the top of the channel intersect. So I would say that at the least, it's probably going to try to make its way up there. There's about 150 pips. I'm sorry, 250 pips. No, I was correct the first time. 150 pips of distance between current price and that target area. So this is another one we can keep an eye on and look for a good entry. It has retraced in the last few days of last week, so you can see that we had a decent drop, and now the market open, actually the last day, this was Friday, all else was positive. So Friday we had a retracement, and right now it's just hanging right there at the bottom of that level and waiting to pick a direction for the week. So we'll let it pick one, and then we'll do our best to tag along for the ride. Moving to our next pair, the Aussie Canadian. The Canadian has been strengthening against the Aussie, strengthening to the degree that it did burst through the trend line, the upward trend line it had been following. So very sustained Canadian strength for the past 2 or 3 weeks against the Aussie. You know my feelings about the Aussie. It has been, I think, in a slump for no good reason at all. In fact, the only currency it had been appreciating against was the Canadian, and now even that has failed. I do expect Australian strength to return to the market, so this one will likely be heading back towards the top. This is another pair that enters my radar for both short-term and long-term trades, because I expect the Australian to regain strength and the Canadian to regain weakness in the short to midterm. So if that happens, if either one of those happens, this one will start moving up. But if both of them happen, this one will skyrocket. It'll just make a play for the top within a matter of a couple of days at most. You'll just see these very long arrows starting to form as it rises. Sort of like these long arrows we can see here and here, where we had just amazing price movement within a single day. That sort of thing will happen on this chart if it plays out the way I think it will. For now, of course, there is no entry on this one on a daily. It's just heading down. So we need to wait for that to stop before we take any action. But I'll be keeping a close eye on this one as well as a big opportunity for a future trade. Euro Swiss, not much to see here. You can see that the Euro Swiss had a long period of slightly bullish, but in general sideways movement. Then it had a significant drop, more sideways movement, rose sideways, is now on another small rise very near the resistance formed by the prior high. So it's right near that point. I do not know in which direction it will go. Of course, a break is the more likely one. If it breaks this trend line, it will tend to drop towards the outer trend line, and that may give us a good opportunity. This would be the major area of support, both from the trend line as well as the Ichimoku cloud. You can see that they're exactly in the same area and in the same direction as well. So we'll keep an eye on this one. I don't think that it has a lot of room to move towards the top, so I would not be trading it long by preference, but I would enter a short to take it back to, as I said, the trend line. So we'll keep this one, keep the visibility on this one as well. Moving on to the Euro Pound, one of my favorite pairs in the last month or so. We saw it significantly, the euro significantly weaken against the pound in this drop following that trend line that's drawn there. It staged a brief recovery about a week, so we did have a bad week, and it has since started dropping again, and it looks like it's making another attempt for that low. And I am in a trade on this pair, and my target is exactly that low. So I'm looking for it to make another attempt here at the bottom. If it starts moving aggressively, I may move that take profit out of the way and just start adjusting my stop. But so far, I'm happy that it did stop rising. It was going against us for a while. It crested back here and is now looking very good again as a short, which is what we're in. So I'll leave that one be. I'll be keeping an eye on it, but since that is an open trade, I likely won't be doing anything much more than keeping an eye on it. Moving on to the EURJPY. We can see that the EURJPY has seen JPY strength returning against the euro since the beginning of the year. So we saw that sharp drop. But once it dropped to this level at the 129.35, it seems to have run out of steam, started retracing, made another attempt at the bottom, couldn't pierce it, and is now trading at a slightly higher level, very sideways, following an upward trend again, but it is a very recent one. So this one does not have the same strength as some of the older ones that you see on the screen can have. I don't see a whole lot of decent opportunities to trade this pair. I'll still keep an eye on it, but it's not going to be one of my main pairs to look at for the week, unless something changes. Euro Canadian. The Euro Canadian, as with most Canadian pairs, we can see the Canadian weakness. It's definitely rising. It hit the top of the chart. Then we see that same Canadian recovery in the last 2 to 3 weeks that has made it drop. But even with that drop, it has not managed to pierce the outer trend line or even actually touch it. It has stalled around the area of resistance, rather support, formed by the Ichimoku cloud here on this daily chart. Has now gone back up, making a bottom here. And likely, as I said, I do not expect sustained Canadian strength. So if I traded this pair, I'd likely be trading it back towards the top, where we have about 250 pips. Yes, 200, actually more, I'm sorry. That's 61. That would be about 350 pips between the current price and the recent high over here. So that is a decent amount of pips to look to capture. I'll be looking for entries both in the short term and the long term, trying to capture 50 to 100 pips on short term trades, but I may enter a more long term trade on this one with a wide stop and a limit at the 350 pip level. So I'll keep you guys posted on that if and when it happens. For now, I would still continue to expect this this pair to be following this channel and heading towards the top. But we might see a very quick breakout and a retest of the high. So again, I'll keep you posted. Pound JPY is going to be our next pair. The JPY has strengthened against the pound in actually since the end of January. We can see the same thing as we saw in the EURJPY. A massive recovery from the yen, followed by a breakout into yen weakness, where it actually re-entered the channel indicated by these two red lines you can see. So it is making another attempt at the top of the channel. It has about 200 pips to go. This might be a good trade if we try to grab those 200 pips as it makes its way back to the top. So I'll be keeping a close eye on this one for the first trading day of the week and see if I get any long entry signals to take advantage of that. You can see the wedge that it is that it has been climbing into, and that wedge pretty much ends at the top of the channel. Not sure whether it will have strength to continue going to the top of the chart, but it should at least be able to make it to the top. On a long-term trade, I would likely enter right now without waiting for any further signal. It's enough that it is a trend that it has been following, and it does have this room on the wedge, on the trend, on the channel. All those are points that we can just start to tally up. Is it in an uptrend? Yes. Is it going up into a wedge? Yes. Is it heading towards the top of the channel? Yes. Has it broken a descending trend line? Yes. So it really doesn't have anything against it, except on the daily, the MACD is still in negative territory. The Williams percent, however, has clearly breached into buy me, buy me, buy me territory. So this is one that I may enter early simply on the fact that I expect a long-term rise. The stop, however, would need to be at least the same 200 pips. So that is a reason for pause. So I'll be taking a look at that, looking at my risk tolerance for a trade of that size, and perhaps trading at a smaller level than I usually do, but still it is painting out to be a very good trade. Sorry I spent so long on that one, but I got excited. Looking at the AUDJPY, our next pair to review, we can see the same thing with the JPY. We can see the strength, and the Aussie, remember, is a pair that was heavily punished for the entire year so far. So you can see that the drop of Japanese strength was even more impressive against the Aussie. It almost made a complete trip from top of the chart to bottom. Definitely got to the bottom, but it did not start out at the top. But much more impressive than EURJPY or Pound JPY in the drop it made. And even though it faltered over here, it quickly regained and continued into strength and has only now bottomed out and is rising back into Aussie strength or recovery against the JPY. This is another trade I am in long, pretty much at break even now. It's a little bit below my entry. And we do have a new trend trying to make its way up. It has yet to pierce this descending trend line, so it's not as rosy as it might appear. It can still go down again, which is why I have not drawn the trend line from the bottom yet. I'm waiting for a trend line break on that. However, a trend line break will at least take me out on this take profit on my shorter term trade on this pair. I have a longer term trade where the limit is up in the 80s, up in the high 80s, because I am expecting that sort of recovery eventually. But that one will take more time to play out. So AUDJPY also definitely on the radar for this week as well as long term. And Euro New Zealand is our next pair. So the EUROKiwi, and I did enter this trade later in the week. I'm long. You can see that it has bottomed out over here and is starting to make its way back up. It is a very sideways moving pair, and I'm not looking for much. I'm looking for about 100 pips, I think, worth of activity, and I'm risking 100 pips for that as well. So it's a one-to-one trade, and it has been moving in my direction. I think it's at a slight profit, of a little bit above break even. It's pretty close to my entry, but it has been moving in the right direction. So we'll let that one play out. Pound Canadian is going to be our next pair to review. And again, this shows the Canadian weakness all the way from the bottom to the top, with only a little bit of retracement along the way. None of them really sustained except for this one back here in November to December, which was quickly broken. And then we had that steep rise to the top. As with all the other Canadian pairs, the last 2 or 3 weeks have seen a Canadian recovery, which I don't think is going to last too long. Already we can see that we had a drop, and the last candle of the week was very bullish, and we'll see what this week brings. But it does seem to be trying to continue to either rejoin this trend line or simply continue flapping in between the two rising trend lines, which will act as a widening channel as it makes its way to the top. I don't see any sustained Canadian strength coming in the short term, as I mentioned before. So if anything, this one will be a good pair to trade in an upward direction. Moving on. That covers all the pairs we're going to look at. This is a bit of what I see, or what I saw rather, since I did this earlier today while prepping for this meeting. Some of my conclusions: the Canadian dollar continues to regain strength. It's done so for 2 or 3 weeks now. I don't think that's going to be the recovery, the long-term recovery I've been waiting for. I think this is just a test that it's doing, and that it will continue into weakness at some point. So I'm definitely keeping an eye on all the Canadian pairs. but mainly on the pound Canadian, Aussie Canadian, and Euro Canadian for more bang for my buck. The Aussie pairs, I still believe that the Australian dollar has reached the bottom. It's unlikely, but not impossible that it could drop further. So again, this is not a predicting game. This is an odds game, but it will provide huge opportunities on an eventual recovery. So definitely keep an eye on those Aussie pairs to trade them back into Aussie strength. The JPY pairs are going to be a mixed bunch because as global uncertainty rises, the yen becomes more attractive. But if uncertainty decreases, then the money starts flowing out of the yen. So you need to keep an eye on it, but it's been roller coastering, just going up and down as the fears shift globally. Some days the US is down, some days it's up. China is going to start a trade war. China is not going to start a trade war. Kim Jong-un is going to nuke the planet. He's not going to nuke the planet, blah, blah, blah. All that stuff has an impact on the JPY, but there hasn't been a sustained move. It's just been bouncing from attractive to unattractive, giving opportunities to play these bounces, but not an opportunity for a really long-term trade yet. Long-term, I do expect the Japanese yen rate against the dollar to drop to 100. That's about 600 pips from where it is right now. But it doesn't seem to have had the actual consistency to get there yet. We're waiting on that. The pound pairs, the pound continues to regain strength, especially continuing that move against the euro on the EURGBP. So definitely worth looking at the pound pairs. 150 against the dollar is not out of the question. I do believe that it is going to head in that direction. 150 was the exchange rate against the dollar immediately before, and by immediately I mean the very same day of the Brexit vote. So if it does return to 150, it will wipe out the entire movement it's done since it collapsed after the Brexit vote. Short-term trading will provide good opportunities in either direction. Markets wave. JP Morgan was once asked, and this was back at the beginning of the prior century, but it's a well-known anecdote that somebody walked into JP Morgan's office in New York and said, "Hey, JP, what are the markets going to do today?" And the answer was, "They are going to fluctuate." And that's exactly what markets do. And that's the only thing you can predict, that markets are going to fluctuate. Last but not least, the dollar pairs. I still ask that you all exercise caution on the dollar pairs given the high uncertainty in the US, both internally with our politics, the Democrats against the GOP and Trump tweeting, and all the other stuff happening inside the United States, which I won't bore you with. But more importantly, globally, with the imminent trade war against China brewing, as well as North Korea is overdue for what we call a new happening. If you guys were familiar with the 60s and the Summer of Love and all that, it became a thing for artists to just do, and I think Yoko Ono was the one who most popularized it. They would rent out an art gallery and put some empty canvases and invite people in and basically either spray paint or throw buckets of paint at the walls or whatever. And whatever ended up happening with the canvas after it was covered with all this chaos, that ended up being the work of art that was created, and they called that a happening. I think Kim Jong-un is reliving the 60s, and he is doing happenings. So every now and then he'll throw a missile over Japan or do something else outrageous, and the world reacts to the new happening. And he hasn't done one of those in probably a good month. So we're overdue for one. So be on the lookout for a North Korean happening in the near future. And as my parting words, I want to dedicate the last slide to strategy. Strategy should be your guiding principle, should be behind everything you're doing. If you don't have a strategy working for you, then you're probably working against yourself. And sooner or later, just like the pilot of this aircraft here, you're going to find yourself in a place that you really can't get out of. I have no idea how that plane ended up there, other than it's probably been photoshopped in. But if the plane actually ended up there naturally, then I gotta wonder what the strategy behind that was. But anyway, don't confuse strategy, which is a high-level thing, with the trading system. I know we tend to say I have a trading strategy, which means that if the Ichimoku lines cross here and the Williams says this and that and the other, then my strategy is to go short. That's not a strategy. That's a trading system. It's something tactical. Strategy is the global thing, the overriding principles that are going to be guiding your actions, and they include the tactical. The tactical is going to be a small bit of your strategy, but don't confuse the one with the other. Even if in the industry we misapply the term and we tend to call those entry strategies or trading strategies, no such thing. There is no strategies, plural. There is only strategy. It's one thing. It's a global thing. So keep that in mind and study strategy based on that definition. Try to apply it everywhere in your life, but especially apply it to your trading. Try to be a strategist, and you won't find yourself having landed in a forest with no way to get out of there. That is it for me today. Does anybody have any questions or comments? Open mic. Okay, then if I don't have any comments, then I think I am going to call it a day here. I will be back at noon tomorrow for the regular initial session of Monday. So I'll talk to you guys then. Thank you so much. And that's it for me. Over and out. Andy Pedraza for Special Effects Academy in the Forex Trading Room. Thank you.
Cheers, Andres.